Hi, everybody. It's FIBO Group, and you are watching to the Market Watch review. The stunning upside turn in U.S. stocks did not last. The NASDAQ futures are down around 1.7%, while the S&P 500 futures have fallen nearly 1.2%. Australia has seen a drop of more than 2%. Europe's Stoxx 600 is up 0.7%, mainly due to financials and energy. Although the dollar is strong, the Canadian and Australian dollars are more resilient. The European morning is seeing gold slide lower. After falling by more than 2% yesterday, March WTI is still trading well and is currently at $1.84. Asian Pacific market. The Q4 CPI in Australia was higher than anticipated. The Reserve Bank of Australia will meet next week. The market is now discounting a higher likelihood of a June move. The quarterly pace of inflation increased to 1.3% from 0.8% and lifted the year-over-year rate up to 2.6% from 2.1%. The Australian dollar is currently in the middle of its $0.71 $0.72 range, which was traveled yesterday. The nearest cap is in the $0.7185 $0.7200 region. Yesterday, the dollar tested the JPY 113.50 region and then recovered to 114.00. The dollar is testing session highs in Europe's morning, near 114.10. Market of Europe. Today's IFO survey report follows yesterday's positive-than-expected German flash PMI. The overall business climate assessment improved to 95.7, a higher level than expected. This reversed a 6-month trend. This improvement is due to an increase in COVID cases. From 96.9, the view of current conditions has declined to 96.1. This is the 5th consecutive drop. Yesterday, the euro fell below $1.13 but has recovered to 1.1335. The recovery was not extended and new sellers emerged. In the European morning, near 1.1280, we are seeing lows. Sterling fell almost 0.5% yesterday, making it its largest loss of the month. It has not been able to overcome resistance at $1.35. It appears poised to return back to yesterday's low of 1.3440. Breaks could indicate a test of 1.3400. Market of America. The market is not influenced by the Conference Board's consumer confidence and U.S. house prices. This is doubly true considering the stock market slump, the FOMC meeting tomorrow, and the geopolitical tensions in Europe. Although the market is not disillusioned by expectations of a rate hike in March, it has resisted thoughts that it could be a 50 BP move. The market is also less optimistic about a Bank of Canada hike tomorrow. Yesterday's risk-off environment caused the Canadian dollar to suffer. It jumped to CAD 1.27 before falling back with the equity recovery and settling at CAD 1.2640. The close is within a narrow range of 20 pips. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.